It's a brilliant, brilliant event, and you'll come away with lots of new ideas and a better understanding of this incredible exponential world. You get to speak to the smartest people like you trying to figure this out, but also the people on stage. They're the experts. So we get all of that, all in one place, in Singapore. What more can you ask? See you at TOKEN2049.
Is something about to break in China? Welcome to this macro deep dive on China here at realvision. I'm Anatoly, your host for the next 60 minutes. And I'm pleased to be joined by Michael Nicoletas of DeFi Advisors for this discussion on China. Good to see you, Michael.
See you. How are you?
Good. I'm not sure we'll be super upbeat after this discussion on China today, having had initial discussions with you before going on air here, Michael. But I mean, we see loads of stories right now out of China on very weak local consumption, very weak real estate markets. How would you define the current economic landscape in China right now?
Look, I've been worried for quite some time now. And if you look at it from a market's perspective, I've been wrong in the sense that when you're looking at markets, you need to get the timing right. If I'm crying wolf for like 10 years and get it right, it's, you're wrong in the market space. So from a market perspective, I think I was early in being worried on China because I thought things would break faster. However, in the last few months, and I think let's say the last 6 months, things are starting to accelerate on the downside. And why am I saying that? I'm saying that because China needs things to stabilize, and real estate market is falling off a cliff. The stock market isn't doing well. It's lost $6 trillion since 2021. If you put China and Hong Kong together, then you have another 4 or 5 trillion lost in the real estate market. So you're like minus 10, 11 trillion in like the last 2-3 years, which, it adds up at some point. Now, my worry has been, they've always managed to build confidence by, I don't want to say printing money, by adding liquidity. Okay, so it's an easy way. So how does that work? They add liquidity by increasing M2. So M2 is the money circulating in the economy, what you can spend, let's say, for people who don't know what M2 is. So it's the available money that can be used, if you want to say that. So M2 right now in China is around $40 trillion, and with a GDP of like $17.7 trillion. Now, to put things in perspective, the US, which has a GDP of like 27 trillion, something like that, its M2 is 20 trillion. So it's half the M2 that China has. Now, what do? They increase the money supply. The money cannot leave the country because you have capital controls. So money needs to stay in, if you want to say it this way. And that money is used, to prop up real estate prices or keep the stock market up. But in the past 6 months, 1 year, this hasn't happened. Which means what? It means that the losses are probably more than the money that is being put into the system. So this is what has started to make me worry. Now we're talking about a Chinese economy which is highly dependent on real estate. Housing is like 60% of the Chinese households, compared to 36% in the US. And housing debt disposable income is more than 130%. So the Chinese have put a lot of money in that. So that's a big issue right now. The banking system in China, when it comes to real estate, is a big portion. So I think Chinese assets are around $60 trillion. That's a huge number if you put it in terms of perspective, because this is like 50% of global GDP, 54% of global GDP, and it's like 320% of China's GDP. Now, in their peaks, the US was, I think, around 32% of global GDP, and Japan in 94 was like 27% of GDP. So if you take each country at their peaks, how big their banking system was, China surpasses this by a mile. So this fragile situation makes me worry.
I fully understand that, and I concur with that view. It seems like China is stuck in some sort of structural downtrend here. Michael, when you look at the path ahead for the Chinese government amidst all this, right? We've been talking a lot about the deficit in the US, but what about the Chinese public deficit? Do they have the coffers to sort of deal with this situation? How do you view that situation?
Well, we talk about the US deficit, which is like 7% of GDP, if I'm correct. Well, around that number. China's official GDP deficit is 3%. Unofficial is around 7%. The IMF in some reports has it at minus 15%. Now, how does that number? Why that number is different? Why a lot of people find it hard to figure it out? Because in the number which are published, they do not include special government bonds managed under the government's fund. They don't include state capital operation budget. They don't include social insurance budget. They don't include supplementary funds. They've excluded a lot of things. So if you include all that, you get to more than 7%. So now you have a deficit of 7%, and you have an M2 of 40 trillion. So what happens here? The Chinese government has been putting liquidity to fund the deficit actually, because no external capital is coming in. If you look at the FDI is collapsing in China. So that's what they've been doing. We focus on the US, which, okay, I'm not saying that the US situation is good. Okay, don't take me wrong. I think the US is in a bad situation, but things are never absolute. They're relative. And the good thing about the US is that it's the biggest capital market in the world. It's the most liquid capital market in the world. And that attracts capital. So if you're an investor, where will you put your money when you're feeling, afraid? You're going to put it in the US treasuries. Maybe you put it in gold, but you're going to put it in US treasuries. Now, the US treasury market, for people to understand, trades around $15 trillion a month value. China is around 2 trillion or less than 2 trillion. I'd say, around 2 trillion. So you see the size. The whole world goes into the US, who goes into China. And the thing is not that China doesn't want them, but would you invest your savings in a currency where the currency has capital controls, and you might invest in an illiquid market and then not be able to take your money out? So yes, the US situation is bad, but if you look at it in relative terms, it's much better than what the Chinese economy is right now.
You want to unfuck your shit? This is live.
Yeah, that's being recorded. Hey, listen, if you want to unfuck your future, then come and join us in the Real Vision community. Incredible platform, amazing content, some of the smartest people in the world, and amazing tools. And guess what? It'll cost you nothing. Come to realvision.com. I'll see you there, and let's help you unfuck your future.
Yeah, and your point on illiquidity in Chinese markets is very relevant. I used to travel global central banks a lot, speaking to their reserve managers. And one of the first questions around markets outside of their home markets was also always, is the liquidity good? Because we obviously need to buy some assets with the currencies that we get from each part of the world in the reserves. So you're spot on that liquidity is a key measure for these reserve managers across central banks in the world. Michael, we have a lot of focus on that question right now because of a very weak Chinese yuan. So the currency developments are very weak, at least versus the dollar. And we're close to that 7.3 level that they've fiercely defended time after time. So how do you view the path ahead for the Chinese currency amidst this major wave of Chinese debt?
Well, China, in my view, there are not a lot of things they can do. They can lower the value of the currency, and they're trying to do it in a manageable way. So, you lose like 0.5% a month, 1% a month. It doesn't raise an eyebrow, only to people who look at it every day, but it won't make a headline. And I think that's what they're trying to do. Why do they want to do that? Because China has two ways to accumulate foreign exchange reserves. One is through FDI, and one is through the current account. So until now, they were focusing on investment, and investment was a big part of the economy. And now they're trying to shift to manufacturing. So to shift to manufacturing, what does it mean? You're going to subsidize manufacturing in order to export, right? The big part of the exports. So you need to lower the value of the currency. Given that tariffs are coming, and we see that every day there, we're going to see, I think we're at the beginning of a tariff war across the globe. It's not a Chinese thing, but people will feel more, they will want to go more inward. You can see from the elections in Europe, you can see the elections in the US, everyone's going to try to put their country first. And that would be very hard when it comes to trading and doing trade with other countries. So China has two ways to accumulate FX reserves. So if it lowers the value of its currency, it can export more, or at least it can balance out the tariff increases. And by doing an FDI, by lowering the price, you can attract more FDI into the country. So now in FDI until now was very strong. But if you look at it since 2000, I think 10, it's been from what was the number? I think the number was 10% of GDP, and now it's 1.5% of GDP. And so in 23, it was like 80% lower than in 93. So the FDI in the US, in China. So they're trying to accumulate money, and they try to increase investments in the country. FDI is overstated, I would say, because there is a lot of money coming through Hong Kong, which is what they call round tripping. So China sends money to Hong Kong and then it comes back. This is around 25%, according to the IMF or the World Bank. And that money comes and goes. So if the FDI is that number, it's much worse, in my opinion, than what we see. And they need to lower their value, lower the value of the currency to attract more FDI and to increase their current account. So it works both ways for them. The only thing they don't want to do is scare people. So they do not want to do this abruptly, and they don't want to do it in a fast way. So they're doing it the way you see it. So it's been from 720 to 730, like in 5 months, 6 months, something like that.
Yeah, a very slow move, but a small smidge each and every day. And Michael, in relation to that, I mean, we obviously often get questions on Chinese ambitions in the foreign exchange market over time, the potential for a BRICS currency. So this current regime where the Chinese yuan is at least somewhat linked to the US dollar, at least they manage it within some sort of bandwidth against the US dollar. How do you view that link versus the dollar and the potential to create some sort of reserve currency out of the yuan over time?
China clearly wants to become a global reserve currency, and it wants it not only for mercantilistic reasons, but for functional reasons. Because if it manages to succeed and get from, I think, 7% of global transactions to, let's say, 40 or 50%, then foreigners will accumulate FX reserves in renminbi, which will then need to deploy it in their local bond market, which then all that M2 that is shut down in China will be able to get out, if you want to say that. Because if you look at the US, the biggest weapon of the US is the euro-dollar market. The euro-dollar market, I mean, the dollars created outside the US, to put it, not the euro for people who don't know. So what does the US do? The biggest weapon the US has is the US dollar. It's like 80% of global transactions. They have the euro-dollar market outside the US. Everyone needs dollars. So every time the dollar gets stronger, everyone gets squeezed. So they come back to the US one way or another, asking for liquidity, and then the US facilitates, and I'm pretty sure they don't do it for free. So something comes back. Now, China wants for sure to become a global reserve currency and but in order to do that, it has to do two things. It will have to open the capital account, because with capital controls, it will be very hard for someone to accumulate a currency that they might get stuck with it. And they'll need to make their market more transparent and more liquid. of course, it's a chicken and egg problem. So you need to do a bit of both, and both. It's a positive loop. As the currency becomes more freely traded, the local market becomes more liquid, and vice versa. So I think that's the main issue China needs to do, and they want to do it. However, they're faced with a dilemma. If they open the capital account with a 40 trillion M2 and 3.2 trillion in FX reserves, which is 12.7 times more than their FX reserves, China might not have external debt, which is usually the problem, but it has too much money in the country which wants to leave. So if that money that wants to leave decides to leave, your 3.2 trillion is nothing compared to 40 trillion M2. I'm not saying if 40 trillion are going to leave the country, but it's 12 times more. The Asian tigers in 97 collapsed when that number exceeded 4 times. So just to put the number. But because of capital control, because it's China, because everyone thinks that China has it under control, it's still manageable. But if they were to go for a global reserve currency, they would have to open the capital account, which means that money would leave. They would have probably a big devaluation. And if you look at the banking system, we just mentioned a bit earlier, which is like 60 trillion, around 57 trillion worth of assets. Now, with all the real estate and the stock market having these issues, and the banks have taken less than 2%, have shown their balance sheets less than 2% of NPLs. So imagine that number being bigger, they would need to be recapitalized. That would be the magnitude of 5 to 10 trillion. You see the numbers add up. So it's very hard for them to open it. So they want it, but they can't have it. And when we talk about the BRICS currency, Russia has capital controls. India has capital controls. China has capital controls. You cannot have a collective currency with half of them having capital controls. Who's going to have what? If they don't trust each other, how will this work? Yes, it's nice to say it in words. It's really, really nice to have it as a headline. People get really excited, people who think the dollar is dying tomorrow morning. But these things take a bit more time. I'm not saying the US dollar is not doing things it shouldn't be doing, or the US government, but I'm saying it takes much more time for all this to play out. And usually it takes 10, 20, 30 years. We might see the first signs, but we're not close to that. So from a trading perspective or from an investment perspective, this is not an issue for me right now. It's something to look at it, but we're far away from going from 7% and overthrowing the government, the US, which is 87% or 80% more. It will take a lot of things for this to switch. Yeah. That's the way I see it, at least. I don't know if you agree. I don't know what your thoughts are on this, but it feels to me that it's very tough.
Well, it's not an imminent discussion. I agree. I guess I get quite a few questions from, say that you're a millionaire or potentially even a billionaire, and you want to sort of protect yourself against a scenario where the US dollar loses value versus, for example, a BRICS currency. Is there a way to sort of mitigate that risk from an investment perspective? What would you buy to alleviate that risk? And I can ask you the question. I may have a few inputs on it after that.
But the way I view the world is the dollar. And if I have to buy anything else but the dollar, and I'm talking in size now, I'm not saying Bitcoin or anything, because I'm in favor of Bitcoin, but I would not put, all my money into Bitcoin. Okay, I'm not a maximalist, I don't think one should not have any Bitcoin. I think everyone should own some Bitcoin, and I think it's something which makes sense. Now, if I don't own dollars, my view is to own gold. Yes. And why do I say so? My personal, and I'm in Europe. Okay, so that will help explain what I'm thinking. Being in Europe, I hold dollars and gold. I don't hold any euros, or I hold as many euros as I need to live my life, but I don't hold any euros from a perspective. Because what happens if the dollar strengthens? Gold usually falls, but sometimes, as we can see, it rises as well. But when dollar falls, gold goes up. So why not have an asset with no counterparty risk when I get the same effect as I would have if I hold another currency. Now, I'm talking about trading right now. I'm talking about an asset allocation. Now, okay, if we see extremes, I'll trade them. If you see the yen going through the roof, maybe I'll buy some. But this is not something I would do right now. And then I like Bitcoin, I like gold, as I said. I like hard assets, which yield something. So you need to be, high quality investments. And I think the US, with its bads and all its wrongs, it's still the favorite place to invest. The structure of the market is such that it can't be compared to something else. That's my view. I don't know if you agree or not. But
Well, I guess in that ultimate tail risk scenario where China will try to open its capital account, it's hard not to see gold performing versus the local currency out there, right?
agree.
So I agree with you that it's a strong hedge against that scenario. And I mean, in relation to that discussion, Michael, why is it even possible right now to measure the amount of capital flight that we see from China? Because I often go to Singapore. I haven't been to mainland China for a while, and I meet a lot of Chinese entrepreneurs leaving the country for Singapore, and obviously they've brought their money abroad to a certain extent. They typically have to pay to leave, but is it possible to measure how many of these exits we see from wealthy Chinese people?
It's very hard, and I'm saying it's very hard because even if the information that you find, you can see the signs that it's happening, but it's very hard to know the number. I'll give you an anecdotal information. How do the Chinese take their money out? They have a company in Hong Kong. They over invoice. They send a portion to Hong Kong, and then that money leaves. But that way is not available to everyone. Okay, so the ones who can do it, they do it. But if someone goes to the PBOC and one goes to the HKMA, which is the Hong Kong Monetary Authority, and you look at two numbers, okay? Look at exports and imports to Hong Kong on both central banks. The numbers should be the same, or at least should be close. But the discrepancies in the billions of dollars, they don't have the same number. The numbers deviate by I don't know how many billions. So, and I'm saying, okay, it shouldn't be exactly the same, but they're not even close, which tells me that things are moving towards getting out of China. Now, another thing you can look at, gold in Hong Kong trades at a premium. I think it's been written, it's been, you can see it everywhere. In China, you're still allowed to buy gold, and it's still a privilege. So if you're a Chinese and you feel you're not safe in the banking system, you feel you cannot you take your money out, what do? You either buy gold or you buy Bitcoin. Bitcoin is very hard for someone to buy because they've made it very hard, but gold still is the only way to do it. So people buy gold. They don't care if there's a premium for it. They'll buy it, and they'll buy it in order to protect themselves from a systemic issue. That's how I see it. So there are a lot of signs which show that the Chinese are taking their money out. It's very hard to quantify it. Yeah. But look, if the real estate is going down, if the stock market is not doing well, if the government keeps pumping money and the deficit is at 7% or more, where is all that money going? Why isn't there asset inflation in China? What do they do with the money? There's sound leakage. With these kind of numbers, you would have expected the growth rate to be through the roof. And I think last year, growth was like 5%.
Yeah. Official
growth was 5%. Now, investment is like 45% of GDP. And it was flat last year. How do these two numbers reconcile? So the important thing to understand that China, the GDP number is an input number, where the rest of the real world is an output number. So they put a goal at the beginning of the year, and the local governments need to achieve it, so they'll do anything to achieve it. In the rest of the world is what you produce, that's the output number, that's your GDP. So the two numbers are not comparable. So when we say that China grew 5%, it's not the 5% we understand. what we have as a common denominator in the West. So you cannot have a 5% growth number and a 45 when 45% of your economy is flat. How does that happen? When FDI is at its lows, when the current account is not doing anything tremendous. So I need to reconcile the numbers. Something has to give. And I'm pretty sure that if the numbers were better, the Chinese government would do anything in its power to build confidence and show that it's better. So my view is that the numbers we see are the best case scenario. Numbers are likely worse than what we see, which are bad as they are.
Yeah. I track some satellite data. I think it's from NASA in the US. So tracking the amount of light over industrial complexes in both Beijing and other cities in China. I also track some data on air pollution in China. So two non-manipulative numbers.
Interesting.
On the industrial activity. And it was absolutely on the floor in 2023. So obviously there was a recession. They just didn't report it.
So you have it year by year? You have that data
yes.
on a year by year?
Yeah. And I mean, it looks like a 10% recession, something like that. Obviously, you cannot exactly say that it's a nominal measure of
you get a feel for it.
But you get a feel for it. The direction of travel was certainly negative in 2023, but it's actually improving a bit this year, but from a very bad level, right? And I guess that's an interest. We've gotten a few questions from the audience already. Can we say something positive around China? And in relation to that, I'll start with a question on the strategy in relation to the Chinese holdings of US treasuries, because we get a few questions in wondering why are they actually offloading US treasuries in this scenario? Is that in preparation for a future where the Chinese yuan is decoupled from the US to a larger extent? Or how do you view that situation where they're actually offloading US treasuries in this scenario?
That's what I thought. And then I came across some research which suggested that China is accumulating US FX reserves through Luxembourg and Belgium. So actually the number is flat and is not being reduced. So it makes a nice headline. China is offloading US treasuries. The news write it. People start saying the dollar is dying and all that. While at the same time, through another vehicle or another form, they are accumulating through Belgium and Luxembourg. And the data that I saw, it was that the last year it's been flat. I wouldn't say it's offloading, but it's flat. So I think that made a lot of sense. And the research was quite compelling. So I'll take that. I can't see how that happens and the US Treasury market is flat. Okay, so it hasn't done much in the last year. So I'd say that I wouldn't buy it. I don't think the Chinese are selling. And if they're selling, it's because they don't have any dollars and they need them. So they sell them because they have to stop the currency from falling faster. So that would be my case if it were for them to drop. But I don't think it's dropping. And I think they're managing a stable devaluation in order to make it more compelling for foreigners coming.
Yeah. It's a good point on the accumulation outside of Chinese shores. I obviously referred to the official data from SAFE, the investment arm of the Bank of China. And when we look at the gold reserves of SAFE, the investment arm of People's Bank of China, they've been buying a lot of gold, also officially in China. They made an announcement in May that they halted the purchases of gold in May. We don't know whether they've bought in June yet. But what do you read into that official buying of gold also in China? No, it's not only unofficial, it's also official. Is that important?
I think it's important because I'm always trying to think scenarios. So what happens if this happens? What happens if that happens? So let's play out the scenario and see if you find any flaws, and we can discuss. I'm not confident in that, but I'm thinking out loud here. So if you're China and you see this situation, which is your economy having serious issues, and you need to find a way to deal with it, what do? You devalue your currency. You recapitalize your banks. Most likely, you do a bail-in, so you use your deposits to do it or else you will need to increase your M2 even further, and that number will take you through the roof. And then after you've created this mess, you probably peg your currency to the gold or to something else, probably gold because you accumulate a lot of gold, and you stabilize the situation to a new equilibrium. That's how it feels to me. Maybe I'm wrong. I don't know. Maybe I'm crazy, but to me, that's what makes sense right now. I can't see another way out. Okay, and gold is neutral. So, and at this stage, with everything going on, we know that if the fiscal irresponsibility, which is happening around the world, stops, you'll have a depression. So you have two things to choose. Well, either you have a depression or you'll continue to have inflation, right? There's no other way to deal with it right now because productivity won't increase overnight. There are a lot of things that need to happen for productivity to go up together with your fiscal deficit so that you don't get the inflation. Because if you have fiscal deficit without productivity, it's inflation going bananas. I don't know if you agree, but that's how I think of it. So with all that responsibility, having hard assets, and I think we see this in Bitcoin, and Bitcoin is so small in the sense that it's like 1 to trillion. And when there are inflows, you can see it really, it's really fast and really big, the moves. But in gold, it's not that easy. I think Bitcoin and gold are not going up. Everything else is going down, if you understand what I'm saying. So it's like having something stable and everything else being divided. So that you retain your purchasing power. That's how I see it. So I think it's smart on their side to buy gold. I don't know how much money they have to buy more gold, but the fact that they stopped buying is also a red flag that the Chinese, they would never stop buying gold. Why are they stopping buying gold?
Yeah, it could of course be a tactical move because they find the gold price to be a little bit high currently. At least from what I can gather from their speeches from the People's Bank of China, I think they have a target of clearly accumulating more gold than what they already have. So that would clearly rhyme as well with the theory you just laid out. I haven't thought of it that way before, but it makes perfect sense for China to find some sort of physical backing for their currency over time, given the debt mess that they're stuck in.
But I think they would do that. I think they would do that after a crisis of confidence. I think they're using this. If there's a crisis of confidence for any reason, I think this is their backstop to bring things back together. That's how it feels to me, at least.
Yeah. And I mean, even though we've had bad headlines from China for, the past couple of years at least, we're not there yet. And the interesting thing, just before we went on air, and that was also why I asked that question live on air here, is something breaking in China? You said to me that you had kind of the vibe that something was breaking. What is breaking?
I feel that China is juggling like 20 balls in the air, and 1 or 2 balls have fallen off their hands, but they're still keeping control of the other 18. But when you lose the coordination and the balance, things start to fall off your hands. That's how it feels to me, because until now, they could manage the currency. Until now, they could tell the world that their banking system was safe. Until now, they could tell that the real estate was okay. Now, let me put it this way. The Chinese GDP in the last 30 years went from 800 billion to 17 trillion. And if you look at the MSCI, it's flat. How can an economy grow tenfold and their stock market being flat? Well, and now all these things are coming to surface. So people are, one thing, second thing, third thing, fourth thing, everything comes up. And because of Trump, because of Le Pen, because of Meloni, because of all these political changes that we're looking at the world right now, there's an isolationism, which means that tariffs will increase, which means more pressure we put on countries which are highly dependent on exports. So I think every extra thing has a very big effect on China. you accumulate things, and it's the last drop that makes the glass, spill. It feels to me that we're close to that point.
Yeah. So, Michael, relating to that question from one of the viewers on whether we could say anything positive around China, let me put forward a few observations I've made this year and get your remarks on those. We've seen China accumulating a lot of copper this year. We've had loads of discussions both on Twitter and elsewhere on why that is. Why are they accumulating a lot of copper unless they have some sort of idea or plan on how to use it? And on top of that, we've seen a wave of Chinese cars reaching, for example, European end consumers, right? They've actually made a pretty good job at, if not innovating that, at least replicating the wave of EVs that we've seen, for example, from Tesla, right? So could the Chinese authorities be preparing for some sort of power grab on the green transition that we're trying to orchestrate through the West? How do you view that situation and whether that's part of the business plan for China here?
Sure, it's part of the business plan. If you look at their focus on manufacturing and the incentives they're giving to the manufacturing sector, it's huge. Manufacturing is like 27% of GDP in China, when the average in the rest of the world is around 14, and I think in the US it's 10%. So it's clearly a strategic move. But accumulating copper has twofold, in my view, use. A, you use it to do what we just described. B, by accumulating commodities, if your strategy is to lower the value of your currency, you're doing it before it happens, because then it will cost you a lot more. So I think it works on both ways. You accumulate it while your currency is strong, you devalue your currency, and then you do an export boom on EVs, which make it even cheaper. So I think what you say is really makes sense, and I think that's a strategy that, at least from what I'm seeing, it feels like you're spot on.
But it's just not enough to alter the entire economy in a positive direction. Just for those of you watching out there from the US, Michael and I are both born and raised here in Europe, and I guess it's not that usual to see a Chinese car on the roads in the States, but it's pretty normal to see that in Europe right now. And we've seen a wave of exports into Europe over the past 12 to 18 months of these Chinese cars. And in relation to that, the European Commission, and allow me to say, finally reacted to this by actually entering this tariffs war. To me, it seems like the European Union has been sort of stuck between the US and China, fighting each other on trade, while Europe has said nothing. So how do you view this trade war, now Europe being part of it, Michael?
I think that Europe is committing suicide. It's committing suicide, and I'll say why I think it's committing suicide. All its industrial strategy is going down the drains. Let's start from the energy sector. They tried to expedite the green transition, but they expedited the green transition before making sure they had enough supply. So the Germany shut down the nuclear reactors before being able to support the green energy. Now they're opening back their coal mines. This has been across Europe. And then they taxed all the European industries with CO2 emission credits and stuff like that. So suddenly Europe was not really competitive in producing. So what do? You go to another country to produce, or China becomes much more cheaper to produce. So they've killed the industrial sector in Europe. That's the one problem. And the second problem is that because everywhere else is cheaper, they have to import. And now what do? Instead of fixing the initial problem, they're putting tariffs instead of making their industry more competitive. Because because the technology European car makers have, for example, is huge. They've been in this game like for 30 years and been ahead of everyone. How can China overnight surpass them? What's your incentive? To block the Chinese from coming in, or to make your industrial complex more competitive? We're doing the first one instead of making the industrial complex more competitive. So we're doing the same mistake. And I don't know how this will turn out, but if you see it and you see the European elections, and we had the European elections in June, you see that the far right, I don't want to say far right, but the right side of the political spectrum is getting stronger. And why is it getting stronger? It's getting stronger because it doesn't want imports. It's getting stronger because it doesn't want refugees or people coming in and getting their jobs. They get frustrated because there's inflation. Why is there inflation? When you import, we're in a European country because the US has the dollar and all commodities are priced in dollars. But Europe has the euro. So when the euro devalues, all your commodities become more expensive. So everything that Europe imports has become more expensive. And they've killed the domestic, let's say, industry. Or I don't want to say killed, they're killing it. And they're making everyone go away. So in Europe, the political system will get worse and worse. I don't want to say worse and worse. It will get more extreme as we get until something changes. Because nothing changes. What do? You're going to shut your factory in Europe, and you're going to go and set it up in India and China. That's what you're going to do. You're not going to stay here, pay taxes, and be uncompetitive, and pay higher wages and higher energy prices and higher import prices and higher everything. So they're driving the whole industrial complex out of Europe. That's why I think Europe is committing suicide, and that's why I think we're seeing a big shift in the political spectrum in Europe.
Yeah.
I don't know if you agree, but that's how it feels to me, at least.
Well, I guess I'm biased to be a little bit more upbeat on the situation out of the northern part of Europe here, but Germany is not doing well, and we can certainly feel that up here as well. So I mean, it's hard to be an optimist around the European Union. I've frankly never really been an optimist on the European Union, but I'd like to get your take on another aspect of this, because we're talking about China and the Chinese trade ties to Europe and the US today. But we've had these elections in Europe sending shockwaves through, in particular, the French market over the past 3 weeks or so, not least because Asian accounts are pulling money out of Europe. So what do you make of that dynamic? It seems like Asians are scared of the political development in Europe, while the two of us are getting scared around the political and economic development in Asia. So does that leave US as the only bright spot here, or how do you view that?
When we say Asians, I suppose we mean Japan, right?
Yeah.
Okay. So I agree. But first of all, Japan has its own problems. So they need to recapitalize, to repatriate money, if you want to put it this way. One thing. Second thing is, it's, everyone has a bias looking at their country, but I'm from Greece, okay? So I've spent the last 15 years looking at my country going through a nightmare. What we're discussing here is nothing compared to what Greece went the last 15 years. And for the first time, the last 3 years, Greece is counter-cyclical in a positive way, in the sense that Greece has growth, Germany doesn't have growth. So the ECB will be forced to cut rates, and it will be forced to cut rates at the time when Greece has growth already. So it will get another tailwind, which until now, it usually happened the opposite. So Greece was a small part of Europe. No one really cared. So the policy didn't affect Greece, and usually it affected it the wrong way when it had to. So I've seen the structural problems in Europe. And there's a famous saying, which always comes to mind. And they asked Henry Kissinger in the 90s, okay, what do you think about Europe? And he said, okay, when I call Europe, who do I call? Which I think is the essence of the problem. When I call Europe, who do I call? Do I call Germany? Do I call France? Do I call von der Leyen? Who do I call? There's not a single entity or person. There are people who have more weight, but there's no one individual, one country that will do everything, which can do everything. So until we figure out when we call Europe, who do we call, which is a big discussion and it's very hard to implement, I think Europe will always be in the middle, because the US is the US. China has a different political system, which until now, the command and control system worked very well for them. They managed to outgrow everyone. Now we've reached their limits, and we need to see what the next phase is, if they're going to make it on the other side. And Europe has always been fighting with itself. So I think US is always as I like to say, the cleanest dirty shirt. So, everyone's dirty, but the cleanest dirty shirt is the US. And it's not only that, it's the liquidity. Let's not underestimate what liquidity does. The fact that I can press a button, take my investments into dollars, and I can transfer my dollars into euros from my phone. Okay, from my phone, I can do that. That's superpower. Try doing that in China. Try transferring money in Europe in the European banking system. I'll give you that. It will take 2 or 3 days, and you'll have a few phone calls, probably. In the meantime, where's my money? It's a joke. So we have issues which should have been resolved. So that's my take. So I think Europe is in a bit of a turmoil, but I think it can take advantage of all this turbulence to its advantage and see the wake-up call, because I don't think the Europeans are extremists. I think the Europeans are frustrated, and they're trying to figure out a way to express their frustration. And because no one's listening, they do whatever they can. That's how it feels to me. I don't walk around and seeing Europeans going extreme. It feels to me more of a frustration. So they're trying to express that frustration in whatever way it's given to them. So if the politicians listen to that frustration, things can normalize very easily in Europe. That's my feel. I don't know if you agree.
Yeah, I think it's a very, very fair summary of the situation. And the frustration is pretty evident. Also in countries with a better development over the past 15 years than Greece. Even in such countries, we see that frustration. So I perfectly agree, Michael. We're heading towards the top of the hour here, Michael, and I'd like to summarize on this discussion on China and the relation to the West, because when we look at you talked about the 90s before and Kissinger's famous quote on Europe. Remember the relationship we had with the Soviet Union before it was torn apart. We basically had zero trade ties with the Soviet Union. So what's the end game for our relationship with China? Is that a Soviet Union-like relationship with no trade ties at all? Or how do you see this playing out, say, 10, 20, 30 years ahead? I allow you to really put forward your vision many years ahead here.
My feeling is Europe will go closer to Russia than it will go closer to China. First of all, it's a geographical issue. Second of all, let's forget what had happened the last 5 years, but the Russians, being it a religious thing, which are Christians, it's easy with Europe to blend with Europe in terms of that kind of situation. And I think if things normalize, which I'm not I think if Trump comes in, he will finish up with the war in Ukraine, for better or for worse. I'm not here to judge, but I'm saying that it feels to me that he's going to find a settlement. And if that's good or bad, if they are appeasing or not, again, I'm not having this discussion here, but I think things will calm down. And depending on what the next steps are, you could see, I think, Europe and Russia coming again closer, because the trade Europe was highly dependent on energy from Russia. Wheat was coming from Ukraine. There are a lot of things that we had to trade with. So I think the Europeans do not trust China. Maybe they're doing business because they have money and they've been coming in and buying everything. But if you look at it now, everyone's putting a pose. China comes to buy something, they look at it they look at it 4 or 5 times before they say anything. Beforehand, it's where do I sign? So we've gone from where do I sign to being very skeptic. So I don't think Europe and China are likely to come closer under the current political systems. Now, if things change and China changes its political system and things get more open, yes, I could see Europe. That would be a huge. If I were to see China open up and be a more pro-Western economy, it would face a huge crisis, but that huge crisis would be the biggest opportunity of a lifetime to invest there. That's my view. We've seen what happens in these things. So I think that would be the case. But we need to see a lot of things before we decide on that. But under the current regime, I find it very hard.
Final question, and it relates to this question we got from the audience on whether we could say anything positive about China. Is there anything worth buying in China? We've talked a lot about stuff to avoid in China, but is there anything worth buying right now? Chinese fixed income?
I'll be very honest, and to answer that, I'm really negatively biased. So I'm not the person to answer that question. But it feels to me that putting money in a country where I'm not sure I can take it out, that's my constraint. So that stops me from searching more things. I'm sure there are investments in China we can make money. I'm not going to say there's nothing. Okay, but because I don't feel comfortable putting money somewhere where I cannot take it out, I haven't done the work to take a look at it. So I'm sure there are investments there. If you feel more comfortable in doing it and putting money and being able to, and not being sure to take it out, but you feel comfortable with that, be my guest. But I don't feel that comfortable. So that's what stops me from doing it. And that's what stops me from doing deeper research to find something which might make sense. But I'm sure, and I'm really confident there are businesses and there are things that are doing very well in China. I'm not all negative. I just haven't done the work because of my macro. I look at it top down, so my macro is negative, and then I don't go into deeper. If my macro was neutral or positive, I would have done the extra work to find the idea in the country. So I'm sure there are good investments. So that the viewers should not take me wrong. But because of my negative bias and because my macro top-down approach, I haven't done it.
No, it's a fair point, Michael, and I can maybe add that if you look at the free cash flow of some of the larger technology companies in China, it looks pretty damn attractive from a free cash flow perspective. But you have the issues around getting money out of the country. You have the
and you have to trust the numbers.
Yes, you also have to trust the numbers, obviously, and there's obviously the risk that the Chinese authorities they wreak havoc with your investment, as they did, for example, with foreigners holding bonds in Evergrande and a couple of the other big real estate players going bankrupt in China. So it is tricky, but at least when you look at it from a value perspective, and if you trust the numbers, there are some decent lottery tickets in the Chinese equity markets. If you have the risk appetite for those, I guess that's the ultimate fair summary of the situation. Michael, it's always a great pleasure to host you here at the Real Vision platform. Thank you very much for joining us, and we hope to see you soon back on the platform.
Thank you for having me. It's great talking to you as always. And always your thoughts are, and to the viewers, your research is always, I'm a subscriber to your research, just saying. And I think it's great. And it's been very helpful to my thinking and to challenge my thoughts. So I would like to thank you on my side. And thank you for having me today and having this wonderful discussion.
Thanks very much, Michael, for those kind words. And thank you very much to you out there for watching the show. Thank you for the great questions. We've had a blast over the past 55, 60 minutes, and we'll see you soon again on the platform.
It's a brilliant, brilliant event, and you'll come away with lots of new ideas and a better understanding of this incredible exponential world. You get to speak to the smartest people like you trying to figure this out, but also the people on stage. They're the experts. So we get all of that, all in one place, in Singapore. What more can you ask? See you at TOKEN2049.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.